Question: is this the most profitable stock volume trading method? Question: is this the most profitable stock volume trading method? Let's get started. We're on a monthly chart of a PPG Industry Incorporation. We want to answer a specific question. That question is this the most profitable stock volume trading method? Alright. In this tutorial, I want to share with traders one of the most profitable stock volume trading method. Alright. You can see on this monthly chart, I have counted 5 waves. This video is not about Elliott wave, but in order to identify the most profitable stock volume trading method, one must combine, the volume trading with the Elliott wave accounts, Elliott wave analysis, So according to the wave principle, the third Elliott wave is usually the longest wave. So if you are looking for you want to buy and hold, the best time to buy and hold is during the third Elliott wave. If you are looking for a bigger profit, or to maximize trading profit, is also very often during the third Elliott wave, because it's the strong phase of a bullish trend. So you can see that this stock went up, because I start counting the first Elliott wave from here up to this point here. You can see this is a trending phase because the price will be in a rising channel. But during that trending phase, which we call in the language of Elliott wave analysis, the motive wave, the best part of the trend, here it is during the third Elliott wave. 80% of the time, the third Elliott wave is prolonged, is extended, is the strongest phase of the trend. So what I recommend to ordinary traders, so if you are using stochastic MACD, normal technical analysis, if you are fundamental traders, if you are an investor, I always say to traders and investors to learn to master the Elliott wave analysis. If you cannot learn and master the Elliott wave analysis, suppose you are a private investor, or you are a hedge fund, or you are an investment bank, but you don't want to learn to master the Elliott wave, you can outsource that service from another provider of Elliott wave forecast that can help you to pinpoint the third Elliott wave. It's the strongest phase of a bullish trend. It's also the strongest phase of a bearish trend. So the best time, to maximize profit in the financial market is during a trending phase, So if a stock is trending, you can buy and hold that stock, If the stock is trending down, you can sell and hold that stock. If you are no short trader, you should look for stock that are trending, because you want to buy, low and sell high, But though we want to catch the trend itself, the best part of the trend is the third Elliott wave. Now, talking about, is this the most profitable stock volume trading method? Sometimes, not always, you will see a surge, during a surge in trading volume, or a spike, a volume spike during the third Elliott wave. Doesn't happen very often. You can see here the average volume, is here. The average volume for this top PPG Industry Incorporation, The average volume is like 100 million shares. You can see during the third Elliott wave, I can tell you the date exactly, is January 2013. So we are in a third area wave, all right, and now we see a surge in trading volume from 100 million share being transacted. You can see that we have more than 200 million share, so double the average volume, all right. Average monthly volume has doubled, all right, in the month of January 2013. This will alert you that there is something going on. Why there is so much interest in this stock? The average volume usually is 100 million share. Now we have double, okay, the same, okay, amount of share being transacted before. Now we have 200 million share. It should click. All right, if you trade stock, you have to pay attention to, okay, the surge in trading volume or the volume spike. But not only that, remember that the strongest phase of the trend is the third area wave, and this volume spike, okay, is happening during the third area wave. Now, in my view, this is all right. In my view, this is the most profitable, okay, volume stock trading method. A surge in trading volume or a volume spike during the third area wave, you need to pay attention. So what you can see here that this is the third area wave here. If I remove the line, that volume surge was happening during this month of January. This is the month of January. So remember, I'm going to zoom into it a little bit so you can see everything clearly on your chart. Zoom into it a bit. So you see that candle we are talking about is this one here. So at that point in time, when you see a surge into the volume like this on the monthly chart, or even on the weekly chart, I'll prefer monthly chart myself. What you need to do at this point in time during the third area wave, all right, because a surge into the volume is alerting that probably they are buying because it's a bullish trend, and we are now in a third area wave, and now you see a spike, a volume spike during the third area wave. But don't rush, all right? As always, don't assume anything, okay? So you're expecting something, but be patient, okay? So you highlight the high, okay, and the low of that candlestick bar. So on the month of, you wait for that monthly candle to close, so you wait up to the end of the month of January 2013, and you highlight the high and the low of that candlestick bar. You can also highlight the median line of that candlestick bar. All right. So hold on, please. Okay. It's not easy to draw the median line here, so I'll leave it now. Okay, so you also highlight the median line. While you are looking for, look at this candle. Okay, you can see here, you want to buy, you want the price to break above this high here, the high of this month, because you see a surge into the volume. If they are buyers, the price will find a support above the high or the median line. Let me say this again to you, because we have a volume spike. You highlight the high and the low, okay? If the bullish momentum is continuing, is progressing, is becoming strong after this volume spike or a surge in trading volume, my apology to traders. All right. I'm drinking a bit of beer here, Stella Artois. So that's what's happened. All right. So now, if the bullish momentum is strong, you'll see that the price will break above that high. So we want, if the bullish momentum is strong, the price will display a new higher high. Yes or no? So after this volume spike in January, the smart man they usually buy in February. I explained this already in another video at dayprotrader.com, how to buy a stock precisely. Okay, check it out. So the smart money will usually buy in February. All right. If you are trading stock, be aware of that. The smart money usually come into the market in February, around mid-February. Okay. So now you can see here there was a volume spike in January. Look at the month of February. The price dropped down. Okay. It went down all the way here at 64.27. All right. And now look, but it closed, okay, almost at 67.98. And the following month, we see again, it went a little bit down. So there is a bit of hesitation here. That's why you need to be patient, all right? You highlight the high and the low. You know that you are in a third area wave, all right? So your first intention is to buy. But if you want to buy, you want to buy above the high of that month where we did have the volume spike. Here it is, look, my friend. On this monthly chart, look what the price did. The price breaks above that line. Let's color it now into red. It breaks above the high because if it's bullish, it must display a new high. So after the volume spike, we are watching that high. Now you see here, this candle here breaks above it on the monthly chart. Look what's happened, my friend. Retest it. Have I said before? Have I said this before? That break above, retest, break below, retest. That's what we were looking for. Sometime, because why this is happening all the time, because most market participants want exactly that. They want break above, retest, break below, retest. So sometimes, as a day trader, as a swing trader, you need to be very patient because the price doing all this blah, 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 blah. You just need to wait because most market participants want exactly the same thing that you want. And this is what's happening here. You should see that the price breaks above the red line. What he did, he retests with this candle here. This is what we want. So it breaks above, so we have a new higher high above that level of 74.75, which is the high of that candlestick bar when we did have the volume spike. Now the following month, you want it to retest it. So it formed a new higher high. Look, another candle came a little bit below, close below. Look, after that month, look what's happened. The price, from there, it just went up. You see the following candle, bullish. And it just went up. All right? This is the most profitable stock volume trading method. A volume spike that is occurring during the third area wave, you highlight the high and the low of that candlestick bar. You want a price to break above that high to retest it, and you will implement. So after this month here, which month? The month of June 2013. Now you retest it now. So we will say at this point in time to traders, okay, we have a bullish trading setup. Okay? Bullish trading setup. Now you will implement a top-down trading method to trade it. So because we are on a monthly chart, you will say, monthly chart is the trading setup. Okay. We go to each month, daily chart for the signal, and we go to the hourly chart to enter the trade. If we see this on the weekly chart, all right, weekly chart will be our trading setup, all right, 4-hour time frame or 2-hour time frame will be for the signal, and a 15-minute time frame for the entry. If we see this on the daily chart will be our trading setup, okay, the hourly time frame for the signal, and the 10-minute time frame for the entry. So this is a bullish trading setup. Now we implement a top-down trading method. So what are we talking about? It's a volume spike or a surge into the volume during the third area wave. We wait for the price to break above the high and to retest that high of that candlestick bar where we did have the volume spike. After that, we say we have a bullish trading setup. Okay? Then we will implement a top-down trading method. If the signal fell, come out. See here? This is the most profitable. Normally, we don't usually, you will see this setup doesn't happen very often. It's rare to see that. Because, why? I explained this to trader one time. You see this volume here. Okay, this is here, this one here. This volume spike here, you can see here, this volume spike brought the volume to 132 million share. The average volume was in the zone of 70 million share, almost double again here. This is the first bias. So at the beginning of the trend, all right, we have the first bias. Normally, the volume spike will be at the beginning of the trend. You see a lot of volume spike. Those are smart money, smart test. Market participant will buy before everybody else. So you will see that volume spike. Usually you see a lot of volume spike at the beginning of the trend. And then after that, we have a light volume. Light. You don't see any more volume spike anymore because the first buyers do not exit the trade. They are still in the markets. So the trend will remain in place. You understand? So the fuel of the trend or the engine of the trend, okay, we can say represent the group of the first buyers. So usually at the beginning of the trend, in normal, when we are counting area wave, you will see that beginning of the trend, you see a lot of volume spike. Those are the first buyers, and they don't exit the trade because if they exit the trend will collapse, the trend will fall. So they remain intact. But here what has happened, there were few of them here. Those are the first buyers. But during the third area wave, now we have another volume spike. This is the most profitable stock volume trading method. It makes sense? It is also powerful. So if you understand how to count area wave, if you understand area wave analysis, all right, if you understand area wave analysis, you can combine the area wave analysis with the volume spike that is taking place during the third area wave. So you are counting first the wave, you want to identify the third area wave, now you are looking for the volume spike during the third area wave, and then you implement this strategy. The opposite is also true in a downtrend. In a downtrend, the third area wave, the third bearish area wave, is also the strongest phase of the bearish trend. And if we see again a volume spike during the third bearish area wave, we will do again exactly the same thing. So in this case, we draw the high of that candlestick where we have the volume spike in a downtrend. We'll also highlight the low of that candlestick bar. But instead of waiting for a breakout, we look for a breakdown. So what we are looking for, we want the price to break below the low of that candlestick bar and to retest it. Now we will say we have what? A bearish trading setup. Because it's a third area wave, it's the strongest phase of the trend. Okay, now we will implement a top-down trading method, and if we receive a sell signal, we'll take it down. All right, if the signal fell, come out. Usually, the third area wave is the longest, but it's not always the longest. All right. If you want to learn to master the area wave theory, subscribe to 24 Elliott Waves YouTube channel. All right, I highly recommend that channel to all traders. So if you are a new trader, slowly but gradually learn to master the area wave. Now, a volume spike in the third area wave is the most profitable, stock volume trading method. If you have any question, put in the comment section. Any suggestion, put in the comment section. And in due course, I will record another video to answer your specific question. We are the TSTW24 traders talking about answering specific question. Is this the most profitable stock volume trading method? Yes, it is. Happy trading to you all, and speak to you soon.